Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sarah Rasmuss, Chief Product Officer with CircleBlack, to discuss bringing efficiency back to the advisor role. Sarah, it's great to see you. Welcome to Trade Talks.
Great to be here.
What are the benefits to advisors that get efficiency and time back in their day?
Advisors need efficiency in order to get that time back in their day so that they can spend more time engaging with their clients and prospects, growing their clients' existing book of business with them, and leading in with prospects to win new business. We really see that the technology needs to represent the advisor's actual needs. And so what we mean by that is that there's hundreds of technology offerings in the advisor tech ecosystem today geared to help advisors streamline their operational workflow. But what's missing oftentimes is that true interoperability. If the pieces do not work together seamlessly, it doesn't provide that same level of efficiency that gives advisors back time in their day. In addition, it's not just about the investor experience. It's not just about the advisor experience. It's also critically about that end investor experience and providing the end client the best experiences and tools to engage between the advisor and the end investor so that that advisor can guide them to financial wellness. And in addition, these days, it's often also about providing the end investor with tools in order to self-service on their own needs so that they can save those conversations with their advisors for those deeper, more well-meaning conversations. Really what this does at the end of the day is give the advisor better ways to prospect and connect again with their clients and end investors.
So Sarah, how does getting the right technology make a difference?
So advisors need not only the right technology platform and landscape, but they also need the right technology partner. And what I mean by that is that the technology partner needs to be collaborative and take a consultative approach, really understanding what the advisor pain points are and understanding their ecosystem, what the advisor's value statements are when they engage with an end investor. And then having a technology partner that helps customize the technology stack and the solution to provide options that work for the advisor's specific business goals. Again, providing more of that efficiency back in the day, and then also helping them grow their assets under management. In order to achieve that, advisors need to find technology partners that really listen to what advisors want and iterate with them to deliver the solutions that they need. So the technology partner really needs to assist the advisor in putting together all of these different puzzle pieces that best fit the advisor goals, but also looking for the right technology partner that is willing to take the time to not only discover what their needs are, but innovate and anticipate what their needs are going to be in the future so that they can continue to address the needs of this important market.
How is the role of advisors changing?
Advisors have a very challenging landscape in that their expectations of them are always evolving and always seem to be increasing as well. In the meantime, of course, they're also experiencing fee compression where there's tightening fees across the board as well. So you've got this focus on financial wellness that end investors are coming to not only expect, but demand. And advisors need to bring that conversation in and really elevate it. So we've evolved past the idea of an advisor just being someone who keeps your betas low and your alphas high and picks the next best stock. Really, end investors expect that financial guidance and the next best step, even helping them to identify what their definition of financial wellness is. And then having the advisor act as a coach and a guide to help formulate that definition of financial wellness with the end investor and help them each step along the way in order to achieve their definition of financial wellness.
And finally, Sarah, how did the pandemic impact advisor-client engagement?
So already advisors were paying attention to the great wealth transfer that's coming up, and it really pushes advisors to think about the needs of the millennial generation and reaching into the next generation. Yet the pandemic really accelerated the need for advisors to use technology to reach across all of these different audiences wherever they are and in whatever form factor they'd like to engage with their advisor on. So advisors already needed to spend more time developing those relationships, earning trust, engaging with the client, again, reaching into that next generation, all the while continuing to prospect for new business as well. Now, I know a lot has been said about the need for additional touch points and digital interaction with the pandemic. But I think a sometimes overlooked point around the pandemic is it really drove a need to, again, elevate the conversations that advisors are leading with their investors. We talked about the Great Awakening, which drove many investors to reassess what is important to them, as well as the Great Resignation, with many investors and clients redefining what success means for them with respect to their professional life and also what retirement means. So again, it all underscores the increasing expectations of advisors and that advisors need more time back in their day so they can foster these deeper understandings of client needs, help their investors define financial wellness, track their progress to financial wellness, and importantly, celebrate successes along the way in that investor journey. And finally, advisors have to do all of that across all of the different touch points, the face-to-face, voice, on their web properties, and in apps as well.
All right, Sarah, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.